Electric vehicle makers Lucid and Nikola are moving to raise additional funds as both companies aim to boost production amid sharply rising battery costs and new federal regulations that limit incentives for EV buyers. Full disclosure, Brad, anytime I get an email regarding Nikola, I just delete it because it's still unsure to me that they are even a real company. So I want to focus in on Lucid because I do view them as a real company.
EV maker Lucid filing for a new offering that would allow it to raise up to $8 billion. Stocks under pressure, down 7%.
There's a number of other reasons why we like the stock, but we think they're not being given enough credit for technical advances in their autonomous driving software. They just raised the price of their full self-driving software subscription by $3,000. And importantly, that's a very high margin business as opposed to vehicle manufacturing, which is very low margin. We view any weakness as a buying opportunity. We think this is, we like the intermediate story. We like the long-term story because their 10-year plan is to grow their annual production by a factor of 40 from the 500,000 vehicles that they sold in 2020. They want to sell about 20 million vehicles in 2030. And given the amount of free cash flow that they're throwing off, and given the cost of capital advantage that they have over the rest of the industry, we see no reason, to think that they can't get there over time.
So you have a $415 price target on Tesla. So that implies $127 upside. So over 40% upside from here.
Elon Musk lawyers have sent Twitter the second notice to terminate his deal to buy the company, citing totally separate reasons based on the allegations made by the whistleblower and Twitter's former head of security, Peter Zatko. Musk's attorney pointing to Zatko's allegation that Twitter violated its 2011 FTC consent decree regarding user data privacy, alleging that Twitter deceived regulators about the decree, to which it's vulnerable to disruption from data center failures or, quote, malicious actors, and also that Twitter agreed to demands by the Indian government that the company hire its agents and be given access to Twitter's user information. Now,
in this video, Lucid screws their investors hard, the world continues to talk Tesla stock following the stock split, and Elon Musk's acquisition of Twitter is in limbo. We got lots to discuss. And before we get into it, if you want to instantly unlock over 100 exclusive videos, plus my 10-year Tesla stock price targets and loads of other perks, including optional access to my Tesla valuation model, join our growing community of thousands of supporters on Patreon with the link in the pinned comment. You can also pick up some Tesla, Elon, and investment-themed merch in the merch store. First up, in a series of events that literally no one on the planet could possibly have seen coming, Lucid Motors has decided to gently f*** their investors while whispering sweet nothings into their ear in a beautiful British accent. As we can see, Lucid stock down over 6% today. What happened? Well, we're about to get to that, but first, I just want to point something out. Lucid stock, since peak closing price, is down well over 70%. And if for any reason you happen to search on YouTube for a channel called Solving the Money Problem, publishing videos about Lucid, the insane valuation, the fact that most investors buying this stock were gambling, probably wouldn't turn out well, and red flags for f***ing days, you imagine them all. They're fake news, they don't exist, and if you disagree with me, you're just an Elon and or Tesla fanboy.
Electric vehicle makers Lucid and Nikola are moving to raise additional funds as both companies aim to boost production amid sharply rising battery costs and new federal regulations that limit incentives for EV buyers. Full disclosure, Brad, anytime I get an email regarding Nikola, I just delete it because it's still unsure to me that they are even a real company. So I want to focus in on Lucid because I do view them as a real company.
I got to hand it to Brian here. The guy is finally starting to come around. And by the way, kudos for saying this out loud on air. This is the same guy who in the past has been very anti-Tesla, very anti-Elon, but he's starting to come around, so I've got to give credit where it's due. In unrelated matters, he's definitely wrong about Nikola potentially not being a real company, and just like the Lucid videos you won't find on Solving the Money Problem discussing the red flags, the same is definitely true of Nikola. No videos whatsoever discussing the fake truck, the stock pump, the fraudulent statements, none of that, and if you disagree, you're just a Tesla fanboy.
They might raise up to $8 billion over the next 3 years.
It was the Nikola thing.
Over the next 3, I know. You never know what's coming. But look, they
slightly delayed reaction to the Nikola comments there.
It's important to know that Lucid ended their most recent quarter with about $3 billion in cash. So right now, they look to be well positioned. But here's a company with cars that are getting critically acclaimed, and to probably meet some of the demand they are seeing for autos that are well over $100,000 a year, they probably do need to raise money. I don't know why the market would be surprised by this, but still looks like they need some more cash.
Well, I mean, think about where they ended this most recent quarter and what they had actually laid out. And they reported, we were just taking a look at the revenue of about $97.3 million on deliveries of 679 vehicles. But it's really what the company had to say. They said that their Q2 revenue, even with all of that in mind, they continue to have a strong balance sheet, closing the quarter with $4.6 billion in cash equivalents, investments. They believe that's sufficient. This says otherwise. This says that they are going to need to take on more cash, and you're seeing the shares react to that, particularly on this additional dilution to whatever extent that may be. It's not necessarily clear what they may, in this potential shelf or this universal shelf registration, what type of shares that this would be, or what type of offering that this would be. It could be common stock. It could include preferred stock as well. And so all of this is basically just rounded out within this shelf registration and gives them the opportunity, once they so do decide, to actually move forward with any type of offering.
EV maker Lucid filing for a new offering that would allow it to raise up to $8 billion. Stocks under pressure, down 7%. Phil LeBeau here with the latest. What do we know, Phil?
What we know is that it's going to be an offering that could happen at some point in the future in 3 separate stages. Exact securities remains to be determined. As you mentioned, Lucid saying it's going to raise another $8 billion. But this is basically an offering where they will determine at some point in the future exactly what securities, what the structure will be of the offering, and when it will take place. But they do need that cash as they continue to realize the cost involved of ramping up manufacturing. Manufacturing that this year, by the way, they have cut back 3 times now, or at least twice from the original goal. In January, they were going to build 20,000 vehicles. They cut that production target for this year down to a range of 12 to 14,000 vehicles in April. And then in August, the most recent earnings report, they came out and they said, you know what, we're cutting it again. We only expect to make 6,000 to 7,000 vehicles this year. By the way, they ended Q2 with $4.6 billion in cash on hand. And they say, look, we've got the funding to produce well into next year, but now with the additional $8 billion, that means that they've got a little bit more of a runway as they continue to ramp up production. One other EV stock to keep in mind is Nikola, also coming out with an offering saying that it will be raising several $100 million, $400 million selling stock as it continues to deal with the higher cost of production as well as the acquisition of Romeo Power. It's also down more than 7%. David?
Yep, a one-time high-flying SPAC. We can go back a little ways there, Phil, and see that stock a lot higher than it currently is.
AKA, the bell curve is real. Now, for those of you who are a little bit lost in the detail here, in short, issuing stock or having the potential to issue stock is going to fuck investors. Now, don't get me wrong. These companies need money. Even Saudi Motors, who are sucking from the teat of the Saudi wealth fund. Literally, the Saudis own more than half of the company. So, Saudi Motors need to raise money. In doing so, they have multiple different ways of fucking their investors. Depending on how this is done, and I'm not an expert on this stuff, generally speaking, if a company is issuing more stock, it means they are going to the markets, raising capital, selling more stock, and diluting all existing shareholders, hence gently fucking them. It turns out that production is not only hard, but expensive. Surprise, fucking prize. Now, in fairness, there's no other alternative here. Raise money or go bankrupt. So these companies should be doing this. The thing that I really want to underscore here is, for some curious reason, most of the retail investors in these companies don't seem to be aware. These companies both need to spend billions upon billions upon billions of dollars ramping up to volume production and not go bankrupt in the process. This is quite different, for example, to a company like Tesla, who I personally believe will never need to go back to the capital markets again to raise more money. Why? Because they themselves are a money printing machine. They can fund their own growth and expansion ad infinitum. If you guys want to read through the filings, I recommend it. Warren Redlick did a great video on this yesterday, but at a very high level, we're now seeing these companies learning that production is hard and expensive and potentially raising billions of dollars and massively diluting shareholders while struggling to ramp up volume production and massively cutting production targets. Seems pretty bullish, right? And don't get me wrong, I want them to be successful, and this is the only way they can be successful, raise insane amounts of money, many billions of dollars. But from the point of view of an investor in one of these companies, they haven't proven they can ramp to volume production without going bankrupt. And in order to do that, they're going to have to massively dilute existing shareholders. And worst of all is how well the executives in these companies are being compensated prior to these companies making any profits. Something to be mindful of. And from 2 companies precariously positioned, likely to go bankrupt later this decade unless they can pull off miracle after miracle after miracle, it's now onto a company that has already pulled off miracle after miracle after miracle. Tesla. The analysts are finally starting to wake up.
Yeah, thanks for having me. So in our view, Tesla is one of the market's strongest growth stories. When you look out over the next 3 years, we expect their earnings to more than triple between 2021 and 2024. And importantly, it's a secular growth story. It's not being driven by Their earnings aren't being impacted by inflation like so many other companies. It's really being driven by the growth of production from the two brand new factories that they just built and they're ramping up to full production, one in Germany and the other in Texas. There's a number of other reasons why we like the stock, but we think they're not being given enough credit for technical advances in their autonomous driving software.
Did he just say something that's not only true, but about Tesla's autonomous efforts, implying he has at least a fundamental understanding of what Tesla's doing and the fact that the market overall isn't appreciating how far ahead Tesla is, how unique their approach, and how significant their advantage in terms of autonomy? This is a watershed moment, ladies and gentlemen. A Wall Street stock analyst covering Tesla stock saying out loud, in essence, that the stock market isn't fully appreciating how far ahead Tesla is in terms of solving autonomy. This is stunning. Round of applause to Garrett Nelson, from Tesla bear to guy who's starting to actually get it within just a few years. This is an impressive rate of progress. Most of the rest of Wall Street, at least the analysts covering Tesla stock, are still years behind Garrett's current level of understanding.
They just raised the price of their full self-driving software subscription by $3,000. And importantly, that's a very high margin business as opposed to vehicle manufacturing, which is very low margin. They're also a very big winner from the Inflation Reduction Act law that was signed last week, because most versions of their Model Y and Model 3 should become eligible for the $7,500 tax credit starting January 1st, whereas before, no Tesla vehicles were eligible for the tax credit.
All right, so lots of tailwinds there, including the Inflation Reduction Act. But when it comes to headwinds, how big of a headwind is competition at this point? Because we hear so many automakers coming out with EVs, with plans to come out with EVs. Do we actually look at those automakers as competition yet?
No. Oh, sorry, Garrett. I'll let you take that one.
Yeah, so that's part of the bear thesis is competition. But one thing that just happened last week with the signing of this new law is that of the 72 EV models that are currently available for sale in the United States, 70% of those models became immediately disqualified for any tax credit. So it really helped alleviate a lot of these concerns regarding competition. So, and Tesla's Model Y and Model 3 are by far the best-selling EVs in the U.S. No other cars EV is really close, and so that's really important. That really helped alleviate those concerns regarding competition.
So you have a $415 price target on Tesla, so that implies $127 upside, so over 40% upside from here.
40% upside from where Tesla stock is today. Not too far off my Tesla stock base case price target for 2022. As always, if you'd like access to my Tesla stock price targets, you can join Patreon with the card in the corner or the link at the pinned comment. Unfortunately, Garrett's just a little bit too bullish to hit that $420 per share price target. I'm looking forward to the first analyst who does, though.
So Tesla's currently down about 2.5% right now. Would you say to buy here? Or do you think that it could see a bit more pain as the market kind of corrects for this hawkish Fed that maybe it didn't account for and factors in the fact that we're going to continue to see rate hikes?
Yeah, we'd be buyers at these levels.
Well, I never give investment advice, but I will tell you what I'm personally doing, buying at these levels with every spare cent, as I've been doing with every spare cent at every level for the past 6+ years now. Yeah, over 6 years, 6.5 years, in fact.
The stocks had a huge rally from the lows in mid-June. I think it's up about 40% in that time frame. So, it's to be expected that there would be a little bit of a pullback here, but we view any weakness as a buying opportunity. We think this is, we like the intermediate story. We like the long-term story because their 10-year plan is to grow their annual production by a factor of 40 from the 500,000 vehicles that they sold in 2020. They want to sell about 20 million vehicles in 2030. And
more credit where it's due. A Wall Street stock analyst talking about Tesla over a 10-year time frame. 10-year plans. Not tomorrow, not next quarter, not yesterday, not last week, not next month. 10 years. Once again, round of applause to Garrett. Better late than never, my friend.
Given the amount of free cash flow that they're throwing off, and given the cost of capital advantage that they have over the rest of the industry, we see no reason, to think that they can't get there over time.
If Elon Musk is on the hook for Twitter, would that change your outlook for Tesla at all?
Not really. Elon Musk has been able to balance, growth at SpaceX, Tesla, the Boring Company, Neuralink. He's had his hands in a lot of jars over time, and so we think eventually he's going to become more of a delegator and assume more of a chairman's role if he is successful in buying Twitter. So while we think it presents some near-term headline risk with the trial coming up this fall. We think if anyone's able to manage, balancing his responsibilities at all these companies, it would be him.
God damn it. Everything Garrett says is just so reasonable and rational. Tell you what, Garrett better be careful. His colleagues on Wall Street might kick him out of the industry if he keeps making sense about Tesla stock.
So Garrett, I'm trying to think of all the possible roadblocks, not competition, not Twitter. What about the macro picture and the slowing economic environment? We're not just seeing here, but globally. We know Tesla just has a supply problem, not a demand problem. But could it eventually see a demand problem if, we see Europe fall into a recession, if we fall into a recession? Obviously, we're seeing a slowdown in China as well.
Yeah, and I think you've hit the nail on the head. The biggest risk is the macro, and it would be the economy falling into recession, anything that would really impact, further hurt automotive demand. But, it's a high growth, high multiple company. The basis of our $415 price target is 60 times our 2024 earnings estimate. When you have macro issues, you tend to see multiple compression among kind of high beta areas, high beta stocks such as Tesla. So, that's probably the biggest risk, and that's multiple compression.
That awkward moment when the single biggest risk to Tesla stock is nothing to do with the company, their execution, their technology, their profit margins, their wait time, none of that. It's multiple compression. In other words, the way that the Wall Street wankers value the stock based on the macroeconomic environment, which again has nothing to do with Tesla's execution as a company. That's the biggest risk. I mean, he ain't wrong. And now onto the big news of the day, Elon Musk's potential acquisition of Twitter. I continue to maintain that Elon Musk genuinely does want to buy the company, but he doesn't want to get fucked in the ass while doing so. Surprise to fucking prize, as I predicted, this issue around bots, disclosures, potential fraud, never mind more than half of Twitter's workforce being completely and utterly useless professional victims who will probably now need to take about 6 weeks of stress leave just because some bad guy on the internet said something mean about them that's also true, and that's why it's so hurtful. It does appear that Twitter continues to dig themselves deeper into a hole, and it won't end well for the company.
We were also watching Musk here on the day, too.
Yeah, Elon Musk's legal team has sent a fresh letter to Twitter to scrap the billionaire's acquisition of the company in light of a whistleblower's recent complaints. Yahoo Finance legal correspondent Alexis Keenan is here with the details. Alexis.
Hey, Brian. Yeah, this is a letter that Musk attorneys have sent, and it's filed in the SEC filings here. So that's where we're seeing it. And this is really additional justification for terminating the $44 billion merger between the two parties. It's really more ammunition to that original letter that Musk's attorneys had sent to Twitter, terminating back on July 8th. Now, this new letter, it's based largely on the publication of that whistleblower report that came from Twitter's former chief, the head of security, Peter Zatko. He filed that with U.S. authorities, accusing Twitter of both lax security measures and also its executives of purposefully evading knowledge of its spam and bot numbers. Now,
no. Twitter executives purposefully, intentionally avoiding, understanding, knowing, and determining the full extent of the bot issue so they can plead ignorance. Oh, it's not our fault. I didn't know. Nobody told me. I just can't imagine a world in which this would be true. And once again, if for some strange reason you happen to be hallucinating that I've previously discussed this very high probability scenario in which Twitter executives did indeed intentionally avoid actually understanding the true extent of the bot issue, which has nothing to do with them being compensated based on keeping bot numbers low, you imagine that as well, and you're just an idiot.
This new letter says that Twitter is in breach of the merger agreement on 6 different parts.
Make sure you're sitting down for this. 6. Man, I've got to start using lube. 6, not 1, not 2, 6. Let's listen.
It goes after the company's representations at the time that the parties enter the contract. So let's take a look at what those 6 things are, according to Musk's lawyers. They claim that Twitter in 2011, that FTC consent decree that it entered into over protecting user data, that they're in breach of that agreement according to Zatko's claims. So they say that that violates part of the contract that's about representations that Twitter's in compliance with all applicable laws. Next, they say that that claims that the company gave false and misleading information about security. So again, pointing at Twitter's level of security measures that it's running day to day on the platform. They say that that breaches its representation that it did not have any security problems in its financial statements. Also saying that Twitter's CEO gave false and misleading reports to the board in order to cover up what they say are flagrant vulnerabilities in Twitter's security and data protection protocols.
Don't worry about that. I mean, that's not a problem, is it? Is it? Is that bad?
That goes to part of the contract that Twitter represents. It has no knowledge of fraud that involves anyone in the management levels. Also, some additional claims there by Musk's lawyers saying that the company failed to disclose what it should have seen as legal risks, representing in the contract that there was no threatened or pending lawsuits that the company was facing, and also that it wouldn't face any government investigations that it knew of at the time. And finally, their apparent lack of a license for Twitter's core machine learning. We're still trying to find out more about what that claim is exactly. But Musk seeming to think that there's an IP violation that also violates the merger agreement. All in all, they say these things could add up to not only breaches of certain representations that Twitter made in the contract, but also could amount to a material adverse event effect that could impact Twitter and give Musk the right to terminate this contract. But guys, this is more ammunition. Musk's lawyers point out that the parties believe that their original claims still stand, but this is just in addition to those claims. So Musk here coming out in full force and using that Zatko complaint to back it up.
Where are we at within the broader proceedings for the courts, and where they're going to actually allow this into evidence, and where within those proceedings where would Musk's lawyers continue to kind of make their case and ultimately get some type of decision?
Right. So right now we're square in the middle of the discovery process, and that's the part where the two parties, Twitter and Musk, they exchange information, and they're fighting a lot about that. They fought about it last week, and in fact, just yesterday, along with this letter, there are also filings with the court where Musk's lawyers are saying even though Twitter was required to turn over certain information about its spam and bot data, that they're not getting what they want. And so there's a lot of back and forth with the parties about how much Twitter actually has to hand over. They're fighting hard.
Quick question, just want to ask out loud. What do you guys and girls think? Why would it be that Twitter would fight so hard to avoid having to disclose certain information relating to bots? After all, they're suing Elon Musk, attempting to force him to complete the transaction, so obviously they want him to buy Twitter. And the primary reason he's not yet buying Twitter is because they're not giving him the information he requires to verify their claims about the number of bots on the website. If Twitter really wants the deal to complete and, like the board suggests, believes it's in the best interest of their shareholders for Elon to acquire the company, why is it that they would fail to hand over the one critical piece of information that will allow Elon Musk to verify and substantiate their claims around bots and then complete the transaction? That's not suspicious at all. It's definitely not a red flag, and if you disagree, you're obviously just a moron.
Elon Musk lawyers have sent Twitter the second notice to terminate his deal to buy the company, citing totally separate reasons based on the allegations made by the whistleblower and Twitter's former head of security, Peter Zatko. Musk's attorney pointing to Zatko's allegation that Twitter violated its 2011 FTC consent decree regarding user data privacy, alleging that Twitter deceived regulators about the decree, to which it's vulnerable to disruption from data center failures or, quote, malicious actors, and also that Twitter agreed to demands by the Indian government that the company hire its agents and be given access to Twitter's user information. Now, Zatko's allegation do not support Musk's first argument for terminating the deal, but Musk's camps say they do believe that the second termination notice is not legally necessary, but it is in addition to and not in lieu of their original argument. Twitter responding, saying, quote, as was the case with your July 8th, 2022 purported notice of termination, the purported termination set forth in your August 29th letter is invalid and wrongful under the agreement. Now, the question is what kind of impact this is going to have on the trial that is set to start on October 17th. Wedbush analyst Dan Ives tells us, quote, ultimately, the Zatko development and timing is a huge potential win for Musk, which could complicate the Twitter case. Up until the Zatko development, the street was factoring in Twitter to have a clear win in the Delaware courts in October. Ives says, and investors seem to agree that for now, Twitter stock will continue to trade on deal odds as the battle begins to play out in court. Guys?
Now, Julia, I know you're not a lawyer. At least I'm pretty sure you're not a lawyer. But I'm going to ask this anyway, because maybe you've talked to some people who are connected to lawyers in this case. This lawsuit is based on Elon Musk's first letter and termination claim. So this other one is just sort of like a backup. He would have to file a separate lawsuit, it seems, based on this entirely different argument on why they're never, ever getting together.
Well, I appreciate the musical reference there, John. But I think that, yes, I'm not a lawyer. But what I understand is they're saying if the first case does not work, we are saying that Twitter did not hold up its end of the bargain. And that's what it comes down to. They didn't hold up their end of the bargain. The first argument was about revealing information about bots and spam accounts. This argument is really centered, I think, first and foremost on the idea that Twitter violated its consent decree with the FTC. So a lot more is going to come out here. Obviously, they've been in touch with the FTC. This is not the first time we've heard about Twitter's relationship with the FTC. But there's this question about whether they are in such violation of this FTC consent decree when it comes to protecting user data, that would be a whole nother argument for why Musk should not have to buy the company.
Nothing to see here. I mean, it's not like we just heard that Twitter allegedly has installed agents of foreign governments at the request of the foreign governments, nor that there's any issues in protecting user data or any potential security vulnerabilities. Therefore, definitely do not go delete all the nude messages you have received and or sent in your Twitter DMs because half the fucking company can access them.
So I think there's this question about whether or not this will change the timing of the case, whether or not Musk's camp will get more time for discovery. Zatko has been subpoenaed by both sides here, but the trial is, as of now, set for October 17th, and we'll see whether this has an impact in delaying that. It's certainly possible.
Hey, Julia, one thing that's picking up a little bit of steam this morning is the notion, actually the watch that is on watch now to see if, in fact, Musk files suit in federal court alleging fraud, which would then be a huge escalation in this. Is that something that people are watching?
I mean, we never know what Elon Musk is going to do. I'm also constantly watching his Twitter account. Certainly his lawyers would prefer if this all plays out in court and not on Twitter, but he could weigh in on this at any moment. And he certainly has commented sort of subtly on all of these different factors, certainly since the whistleblower came out. But so I think what's interesting here is that, yes, he could file again. I think that right now the Delaware case is what's in focus, and that's going to presumably move forward. But yeah, we never know what Elon Musk is going to do.
You got to have those Twitter notifications on for Elon Musk's account. You never know what's going to come. Julia, thank you.
Now, I'm no lawyer, no expert. In fact, I'm just some idiot on YouTube, so please keep that in mind. But it does appear to me that Twitter continues to dig themselves deeper into a hole. In fact, they're digging their own grave. There are so many red flags around this deal, all relating to potential fraud, misleading and deceiving investors, false statements to the Securities and Exchange Commission, huge red flags like Twitter being unwilling to hand over the one piece of information that will allow Elon Musk to verify their claims and then follow through with the purchase. As I said, I still strongly suspect Elon does want to complete the transaction, but like I said, he just doesn't want to get fucked in the ass while doing so. In either case, it's going to be a very interesting few months. Has Twitter committed fraud? Are they going to be found out? Or will they suddenly, out of absolutely nowhere, scramble behind the scenes and settle just before the case? Let me know your thoughts in the comments below. And as we heard, the real company known as Nikola and the actual real company who are just severely struggling to ramp up volume production, everybody's favorite, Saudi Motors, both issuing stock and likely to dilute their shareholders significantly. I wish both of these companies well. I wish their stock investors well. And I look forward to learning exactly how hard production actually is. Hope you guys and girls have enjoyed the video. And lastly, don't forget you can support the channel, unlock over 100 exclusive videos and my Tesla stock price targets, plus loads of other content and perks by joining Patreon with the card in the corner or the link at the pinned comment. See you guys over there. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you want to support the channel and instantly unlock over 100 exclusive videos, plus my 10-year Tesla stock price targets and loads of other perks, including optional access to my Tesla valuation model, join our growing community of thousands of supporters on Patreon with the link in the pinned comment. You can also pick up some Tesla, Elon, and investment-themed merch in the merch store. And if you're still watching, you're awesome. Please let me know your thoughts on today's video in the comments below, and click the card on screen now to watch the next video.